Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, for an update of technical levels in the Nasdaq 100 as tech stocks take a breather to kick off the first day of the week, also the last week of the quarter and first half of 2023. Chris, time certainly flies by in this business, doesn't it?
Absolutely. Can you believe that the index actually made the 52-week high and hit our target price only a week and a half ago? We've been talking about it for a while. The target's been 15,270. We made a 52-week high on June 16th of 15,284, right where it was. And if you remember what we talked about before, the relative strength of RSI index, we were talking about how it was an overbought condition for almost, we're going 4.5 weeks north of 70. Remember, overbought is 70, oversold is 30. We've been above that overbought sold section, and it's really moved very high. So we pulled back to a normalized relative strength index here of about 58, and you've seen the index pull back a little bit, which is a very nice breather for the index itself. Just because tech stocks have been pulling back, a couple of analyst comments here and there and a few, doesn't mean that doesn't have room to run. Consolidation is good after a strong run, and that's what we're looking at here.
Let's take a look at some fresh technical levels to watch in the Nasdaq 100.
Right. So if you look at the chart that we pulled up earlier, you can see the 15,284 high. We pulled back and consolidating here. We'll call it 14,700, 15,000 on the index level. We opened at 14,866. The index started out strong today, but pulled back, leaking over the course of the day. And during that point, you really have a couple of doubts. We got some economic numbers coming out. The index is going to trade on this weekend and into the 4th of July holiday on more macro conservative items as opposed to earnings. So we've got some Fed speak coming up, consumer sentiment, you got GDP, unemployment numbers. So a lot for the macros to dig into, which are going to move the index around. Support right now sits at 14,611. And the key level here today is 14,770. That's a 61.8 Fibonacci retracement level on the short-term level. So if we close above it, you could have room back to run. If we close below, we're going to test that 14,006 and change. Resistance above 14,823, 14,900, and 14,965. As I said before, note the RSI at 58, which is a much more normalized level. So look for the index to trade on the macros and the more broader information as opposed to stock-specific earnings or other items like that.
Right. And Chris, we've been talking about the breadth and participation in the rally that we've seen. When we take a look at the constituents leading the way, is it a little bit more broad-based?
Breadth is actually positively skewed today. You've got 60 companies in the index trading higher, 40 trading lower. But what's interesting, the big boys are trading lower, despite the fact that Meta and Apple both made 52-week highs today, along with Palo Alto and CSGB. Now those stocks, Apple and Meta, are both down on the day, carrying the index lower. And then you have the negative analyst comments out in Alphabet and Tesla also leading it down, and NVIDIA, of course, as well. So that's bringing us down to the downside. Again, the big boys with the weighting carry more.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.